Good day. Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday, the 18th of December, 2023. Can you believe, first, Christmas is a week away, New Year's 2 weeks away? Wow, going into 2024. I remember as a young kid, I don't even want to go into that. That's how time flies. I can only tell you it flies. Knock on wood, I'm in good shape and getting older, but in good shape and love what I do, and a lot of people don't. You would have thought that the metals would get more of a bump than this with what's going on in the Red Sea. Didn't happen. I mean, they've literally shut down commercial traffic, oil tankers, commercial cargo ships. Nothing's going through the Red Sea right now because of the numerous attacks by the Houthis. There is a coalition that was already together. It's made up, and I'm going by memory here, so I know I'm going to miss somebody, but it's certainly the United States and the UK already have their battleships there, destroyers. What else do we have? Italy, Spain, Achilles are there. There's about 3 other countries that are involved in it. I think Qatar might be one of them. Watching what's going on with ships. Well, I got to tell you, you get to a point where somebody's got to go in. It's Yemen, guys. This isn't Iran, it's Yemen. And you go in and you have the ability to track where these drones are being launched from. Do something about it. You can't shut down world trade because of this group. Now, if you think you can, terrific. Then what is the point of all these battleships, carrier groups, and everything? I don't get it. They're there, use them, you can't shut world trade down. And it's a coalition. It's not the United States against them, it's the coalition. Get the coalition involved and go, guys, any more of this nonsense, there's a price to pay. You've given your warning. All right, that's what you have to do. Iran is not going to take on the coalition. End of discussion, and they don't want to wipe out Hamas and the Houthis at the same time. If you think so, I think you're seriously mistaken. You can't shut this trade down, and that's where the Suez Canal goes through. You're talking cargo ships galore, oil. Prices went up rather sharply today because of it. You got to get the world trade going. I understand what the Houthis' message was, but not everybody is part of Israel, and this got to stop. Period. That's where I think it's going to go. So we'll see. But I was disappointed that gold didn't go up $15, $20 on that news, and it didn't. Why? Part of it is, where are we? Folks, the volume is crashing in the futures markets. People are leaving with their families. They're going away. They're doing whatever they're going to do. All right. My wife's already gone for 4 or 5 days, and I'll meet her up with her. But this is what's going on. So as that goes on, please understand how the markets go and what you have to do. The bonds and notes gave up some premium. And at points today, we were, like at 4.91, and then we went to 4.95 on the 10-year and back to 4.93. So you're swinging all over the board. The dollar was down 1 tick. Now, I'm going to remind you again, my metal report, which is on the website, iraepstein.com, under the word research, is there for you to view. It comes off tomorrow. I don't know the time. The computer takes it off. So I put it up Thursday, Friday. I put it up for 3 business days. So it will take it off tomorrow. That's how we do it. I don't take it off today. It'll come tomorrow. If you want to see it, and I think it's so important, I covered for you the 30, the 15, and the 5-year seasonal patterns. The 5's real important because it takes in the COVID rampage and now the pullback from that. What does that mean typically to the dollar? And then we want to see what the dollar historically does at this time of the year. Very important. So then I'm going to walk you through the market with the fundamentals, Red Sea events going on now, things of that nature. And I'm going to take you first to the weekly charts, and we'll do everything on the weekly. We'll put all the studies that I use on it. Charts will be interesting. Price counts. After I do the weekly, we're going to come in with the daily charts and then right to the price counts. This is beyond time sensitive. It's for right now. This is not a history lesson. It's now. Some people write a report, well, over time, this is it. This is not what this report is. None of my reports are. They're for now. So if you'd like to see it, it's pretty simple. You can move your cursor to the top here if you're on your PC. You can go to iraepstein.com. Under the word research, it's there. If you have trouble, call my staff. They'll work with you, and I hope you like the report. All right. So let's go back and take a look at some of these charts and what they're offering you. By the way, in the crude oil, you are back into the 70s. Remember that. So you got down here in the Feb, well under 70. You've bounced back over time here. I hope we bought that oil, Joe. You know who Joe is, right? Better have bought that oil. In the gold market for the weekly chart of closes, you can see how the market is staying up. And notice, this market has been staying up on a weekly basis ever since September. Once it got back over the 18-week average, it's kept the bullish bias. The poor people that bought here on a daily basis got absolutely their butt handed to them. The market came down, and now we're getting a retracement. But generally, when this happens, you don't just pick up and go back for that high. That's not how it works. You've caught people. These people always think, because I was one of them years ago, they always think, oh, it's going to come right back. You know, it's just the market was overbought. They're suffering a world of pain, not over. The temporary chart pattern, it's feeble, is higher lows and higher highs. You see that from that high to that high, and there the arrows point up to higher lows. If you take out the low, I'll give it to you right here, of exactly 2029.20, this chart can get very ugly on you again and start another break. Be very careful. I'm not saying it has to. I'm saying what it could do. The battleground is to try to stay over my line in the sand, the daily 18-day average of closes, and to ideally get over this high to prove the market could have a punch to the upside. That's what it's got to prove. If it does that, where might it go? I'm going to say it could go to the 2086 level, the upper Bollinger Band, $40 higher. Is this the time of the year you normally do this? The times of the year don't matter. What matters is the event that might move it. All right? I mean, we don't want to wake up in the morning and find out that a U.S. ship has been sunk by the Houthis, and now everything's escalating and going crazy again. And where's that take you? Gold becomes a bid in that market. We have tomorrow the Bank of Japan and their monetary policy announcement. Now, from what I'm reading, the word is reading, I don't think they're about to do anything tomorrow, but I think January's in full play from all the articles that I'm reading, that they are beginning to tweak their YCC, the yield curve control program. They're going to dismantle that from the looks of things. And the currency looks as though they're about to let it start moving itself up. That will impact gold. Carry trades all come into that. So you might want to read my newsletters over time because that really covers a lot of this. The pattern is one with the slow stochastic of oversold, trying to correct, but really a sideways market that needs to clear that high to say it's got a shot at doing something. The gold-silver ratio still favors gold. When you're over the 18-day average, the red line, it means the higher these numbers go, the more ounces of silver you need in a perfect world to get 1 ounce of gold. No commissions, blah, blah. You put it in the shopping cart you took from your local Publix or Kroger or whatever you shop at, and you wheeled it down at the end of the corner to the guy with the cigar in his mouth, and he's a beautiful dealer of gold and silver. He works for free. He'll give you a swap as to exactly what it is. You get the picture, right? All right. Then we take a look at the silver, which is still in a downtrend, but I'm telling you, I am looking at this market really hard. If this market can clear these highs right here in March of the 24.59 level, I get excited on the upside because the market has come down so much, it is one that could go back to the $26 area. I'm not saying it's going to happen. I'm telling you, my eye is on it and as to what it does. I thought this would be an accumulation zone for bulls, and now you got to prove you can get over 24.59. In the copper market, I'm looking at a market that I think is going to pull back to the 200 and the 18-day average and try to sit there for a bit to see what's going to happen. It's hard for me to get excited about copper until I know what China's going to do. Once I know what China's going to do, away we go. In the platinum market, I think you made a top 2 days ago when you hit the combination of the 200-day average and the upper Bollinger Band. I predicted, I thought it would go there. It did. It's overbought. If it goes higher, terrific. But I'm not bearish, but I don't think you should have money deployed on the long side. And in the dollar, you got a little bit of a bounce here. Well, I talk about what to do with that in my report. So that's where I want you headed. Remember, IraEpstein.com, research. I'm Ira. I'll catch up with you tomorrow. You have a great evening.